Hi there, Serial Trader here. Let's check in with the major US indices, starting off with SPX. And as usual, look at the wave outlook. And it was a fairly uneventful week, stayed within a relatively small trading range, and no significant breaks up or down, although certainly still a mild bullish bias in play as of right now. Now we have come up into the target zone here. There's certainly some upper targets that we could hit that I pointed out in the last video. But we have come to that wave 1 and 5 equality level, which would have been at 2804.74. We slightly exceeded that. We went as high as 2813. So when wave 3 is longer than wave 1 and 5 tend toward equality. So that's where that level would have been. We also came up to, so just taking a retracement from the overall decline from the all-time high to the December low, the 786 retracement of that was 2813.72, and we went as high as 2813.49. So within less than a tick, we came to that 78.6% retracement and had a little reaction off of there, although nothing convincing yet as far as significant bearish action. And now we've come up looking to test that level again towards the end of the day on Friday there. So there's that. Now, we have also invalidated one of the potential wave interpretations, and that's where we had this 1, 2, and then we had a 1, 2 of a larger 3. Okay, so this 1, 2 is now invalidated because we got above this level, which was at 2818. Again, we went as high as 2813.49. So we can no longer count at 1, 2, 1, 2. But this expanded flat scenario is very much still in play, where we have our 5 down for 1, and then we have a 3 for A, a 3 for B, and then a 5 for C for that larger 2, and then come down in 3. That is certainly still in play, and it's undeniable that there's clearly a 5-wave sequence in play here and looking complete or nearly so. But before I move on to analysis on some of the shorter time frames, well, first I'll point out, looks like the MACD moving averages are just starting to cross there ever so slightly. So that's kind of a sign. And you have this big divergence here on the MACD histogram. You see that. MACD histogram getting weaker and weaker and weaker as the market crawls higher and higher and higher. So that's a good divergence there. So that is a divergence, although there's certainly no divergence yet on the MACD, although we almost have a cross there on the 12 and the 26 averages. RSI just kind of staying near that overbought range, close to 70, 69 or 70. I believe we hit 70 right here. So no real divergence on daily RSI, although there certainly is on other time frames. But again, we'll get to that in a moment. But first I want to look at this. So we have the other primary count, I'll call it. There's certainly still other wave possibilities, but between this one, where we have the 1 and then the big expanded flat 2, and this one, where we just have the ABC down for possibly some sort of large degree wave 4, and now we're already doing our first bull move up, although nearly complete. This is the other lead interpretation that I'm working here. Keep in mind, though, both require a top relatively soon and then a fairly significant setback, right? This one, a more minor setback, obviously, than this one, which would call for new lows. But looking at this, now again, I don't like this. Here, let me expand this. I don't like this one, and not because I'm a bear or some sort of perma bear. I really don't care which way the market goes as long as I can position myself for it. But what I don't like about this, okay, we have a nice 5 down. That certainly works for an A. We have a nice ABC for a B. But this, labeling this as a 5 down for C, I don't really like it. And let me just clean this up a bit so you can see it more clearly. So this could be a 1 down, 2 up, that's fine. But then this just looks like 1 move down, okay? I don't see a proportional wave 4 to coincide with this wave 2. All I see is a 1, 2, and then basically just 1 move down. So this looks more like a 3-wave move, and that's why the expanded flat scenario still has my favor. So this looks more like an A, B, C. But if you go in on the shorter time frames, there's enough of a little bounce here you can get a small 4th wave. But usually the 4th wave should be proportional to the 2nd wave, if not even more significant as far as at least time duration. And you just don't have that here. You have a clear, and even if we put it on a, let me do this. If we put it on a close only price chart, you can see we have a move down, a clear little bounce up here on a closing basis, and then basically just straight down on a closing basis. Okay, like do you call this little tiny horizontal move to the side a 4, and this a 3? I don't think so. That's not how I would label it. So that makes it very difficult for me to accept that we have 5 waves down for C and we're done, and now we're just off to the races for another bull wave up to new highs, right? That's why it's difficult. Although until it's invalidated, completely invalidated, which would be obviously taking out this low at 23.46.58, it still has to be respected as a possibility. And certainly if we do just come down here in a clearly corrective 3 waves into a former support zone, or sorry, into a support zone, and the previous 4th wave here on this impulse, something like that, and if we get all that, and we also get a typical Fibonacci retracement into that zone, so if that all lines up and we just start reacting off of there and start going up again, this interpretation will have to be accepted as kind of the primary count. But right now I'm not ready to go there. But certainly to keep in mind, this is a bullish scenario that could be in play, certainly. And then obviously after that you go up in a 3rd wave for some sort of larger degree, developing 5th wave in progress, right? And off the new highs, etc. But again, not willing to switch to that as a lead interpretation. Still favoring this one for now. And truly, this one can't be invalidated until you break above the all-time high at 29.39.86. Although I'd certainly want to see it reverse before there. So basically, this count's invalidated at the all-time high, and this count is truly invalidated at the December low. Both of which, well, certainly December low seems farther away now than the all-time high, but really the way this market has proven it can move, it may not take very long to do either one of those things once it gets going. But here we look very exhausted, at least on a short-term basis, to the upside. Now what I do want to do, let's go into the 15-minute price chart here, and let's just examine, and let me just clean up some of these clusters I put here of fib relationships, just so we get a cleaner look at the shorter time frame. So if we are labeling this, now let's maybe the 30-minute would be okay here. See how that looks. It's probably okay. All right, so from our triangle wave 4 that I have labeled over here, you can count 1 up, 2 down, then a 1, 2, 3, 4, 5, 4, a 3. Okay, and then a little ABC for a 4. But again, this 4 looks quite small compared to this 2, but okay, it still works. Doesn't overlap with this 1, and then maybe a 1, 2, 3, 4, 5 for 5. So this is the interpretation where we already have a top in place and we're developing our wave down, whether it's corrective or impulsive, unknown yet. But there's some shorter term strikes against this, and let's look at this. Okay, so maybe we got a little 1, 2, 3, 4, 5 down, then we have an ABC up, and then we have another move down. But let's examine that. And this really just looks like a zigzag down, 5, 3, 5 perhaps, right? So we'll get out the parallel lines. So from the high to that top, off the swing low there. So largely contained within parallel trend lines. Had a little break, but then came right back up. And if we look at the Fibonacci or structural relationship, we have a basically relationship of equality. So certainly favoring just an ABC down, right? Let's just get a little ABC text out here. ABC down. So if that's the case, and we'll drop the degree here a bit. If we do just have an ABC down, then we're already working potentially another impulse wave to the upside on this short time frame. So now maybe we have a 1 ABC for 2, and then a 1 2, or maybe a little 3 of 3 just started near the end of the day on Friday there. That's certainly possible. But you can also make the case, and bear with me here, you can make the case that, let me go to the 15 minute because you'll need to see some closer subdivisions. I'll delete this and that. You could make the case that we have a, little 1, 2, 3, 4, and that's a big 4 for the 2, but still technically allowable. And we'll just make that a small degree here. So 1, 2, 3, 4, 5 down. And this whole thing here has been an ugly A, ABC for B, and then C up. And of course, this would be a larger, maybe 1 down, 2 up, looking for a 3, 4, 5, etc. Like that. So this is possible. And so 5 down for 1, ABC up for a 2, or remember it could be 1 or A. So 5 down for A, 3 up for B, and maybe down in C instead of a 3. And we'll just change that degree again as well. So certainly possible here. And this would be the more bearish scenario, at least on a short-term basis, that we're starting something impulsive to the downside. We have a 5 down for 1, 3 up for B, and 3 up for 2 or B, and then another 5 down for 3 or C. And then, of course, depending how this next 5 down looks, will determine whether it is a 3 or a C, and whether there is something more impulsive starting down, or if it's just another pullback. So this interpretation obviously is invalidated getting above this level here at 28.1349. And the other interpretation, where this was just an ABC down and we were starting a new bull wave, that obviously gets invalidated taking out this level at 27.7513. So on a short-term basis, key levels to watch for kind of a directional break. Obviously the high here at 28.1349 and the low at 27.7513. And right now, it's really anyone's guess whether we do have an actual pivot in place, or if we have just a low in place short term and we're doing at least one more bull leg up. So we don't know yet. I don't see a trade here just yet. Certainly looks vulnerable to a sell-off, but when you zoom in on this really short time frame, it becomes less clear so far. Although I will point out, so over here, let me get to the 30-minute here. If we go back to the all-time high, and let me do that. If we go back to the all-time high over here, okay, what we had was something that initially looked like a pretty A, B, C down, right? And then it looked like we were going to do another impulse leg up. We went maybe 1, 2, 1, 2, maybe 3 of 3, just starting to kick off. Very similar to the formation we were just looking at as of Friday. But then we failed to make a new high ever so slightly. So remember, we made the all-time high at 29.4091. And then we failed to make a new high at 29.3986. So really, within a point or so, failed to make a new high, basically a double top. So this actually ended up being a 1, 2, 3, 4, 5 down. And then we had some sort of complex wave 2. And then we came down in what was clearly a third wave, right? So what I'm saying is, just because it doesn't look menacing or impulsive yet, and it looks like we could possibly make a new high, doesn't mean that that's going to happen, because this is an example of where it didn't. In fact, at the time, it certainly looked more likely that it was going to go towards new highs, but it failed, okay? So we'll see if that kind of scenario plays out again over here where we are now. It's looking quite similar. But if we can't break that high, and then when we do break this low down here, 27.75, that will be good confirmation that we have at least something more significant to the downside in play. And if we do break the high, then some of those upper targets I mentioned in the last video are certainly still in play, maybe up to that almost 2850 level or so. But we'll have to watch. Anyway, I'll delete some of these shorter term labels, just illustrating kind of where things are at here. All right, so I think I've gone over that pretty in depth as far as the Elliott wave interpretations here. So we'll go to the thinkorswim candlestick chart. And on the thinkorswim candlestick chart, I'll point out that every time we've had a pullback, we basically fail to at least close below the T line. We can certainly dip below it, but we don't close below it, and you can see it's been acting as a nice support level, and so far that's still been the case. You see here on Wednesday we came down, just kind of stabbed below the T line intraday, but then firmly rejected it and closed above and actually did a little bullish hammer. And then here we basically hit the T line, closed on it, and then the next day gapped up, came down, touched the T line, came back up again, another bullish hammer, but still no new high. So I'd say once we can close below the T line, especially if we have a good sell signal on the daily chart, if we can do that in combination with breaking that key level on the wave chart, 27.75.13, that'll be good confirmation that we finally have something more substantial starting to the downside, and that we've at least broken the very immediate uptrend that we've been in. And you can see the stochastic oscillator still basically just meandering in the overbought condition, not really falling out of it yet, although certainly moving around within the overbought condition. If we go to the weekly chart on SPX, this is a potential hanging man bearish reversal candle, and you can see that we're in the overbought condition on the weekly oscillator. But again, this reversal signal has to be confirmed by negative trading next week, and certainly it'll show up on the daily before it shows up on the weekly. But this is the potential after a ridiculous, almost unprecedented 10 green weeks in a row. Let's see here, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So on SPX, it's not 10 higher closing weeks in a row, although I think it is on the NASDAQ. I'll have to check the DOW. But you basically had 10 green, between the opening and closing of the week, 10 green weeks in a row on SPX nonetheless, even though I believe this week was slightly lower on a closing basis, but still green. And then finally, a slightly red week as far as opening to closing prices, but again, still higher on a closing basis. So we'll have to watch this potential weekly reversal signal. Obviously, it's not enough to act on seeing that. It has to confirm, and it will do so on this daily chart before it does so on the weekly chart. Okay, so we'll move on to the Dow Jones Industrial Average. And on the Dow, similar outlook here. We had a inverted bearish hammer at the top there on the Dow. So 26,241 was that high. And then we did have a decent pullback for a couple days. But again, just found support on the T-line, just doji, closed on the T-line, and then just another doji on Friday. Didn't make a new high, but didn't close below the T-line, just right there. Very indecisive. So obviously the Dow's level we'd like to see break here would be 25,877.24. And if we do break 26,241.42, that will lead to at least one more small degree wave up before we can start, again, anticipating a reversal. Now on the weekly chart of the Dow, let's see here. I want to see if this was 10 weeks higher in a row. So this week closed at 26,031.81. This week closed at 26,026.32. All right, so the Dow actually closed slightly lower for this week, unlike the S&P. But prior to that, we had 1, 2, 3, 4, 5, 6, 7, 8, 9 higher weeks in a row on a closing basis. Okay, so that was a pretty historic run, fairly unprecedented. There weren't too many occasions at the market where that happened. There were some, but not too many. So we have a possible reversal signal on the Dow. Weekly doji star, slightly lower for the week, diverging a bit from the S&P and the NASDAQ, which were still higher in the week. So often at a turning point, you do have these non-confirmations where one index or two indexes will do something that the other index didn't do, and then that kind of shows you a weakening of that trend, and then it reverses. So that's something worth noting. We are in the overbought condition, of course, on the weekly here on the Dow, on this oscillator. But again, it'll show up here on the daily chart first before it confirms on the weekly. So that's the level to look for to get below right now, at least on a short-term basis. 25,877. Get below that, and we might have something more substantial starting here. Okay, on the NASDAQ composite. Now, I believe the NASDAQ did diverge from the other two indices. Yes, it did. So it actually made a new high on Friday, whereas the other two did not. Went as high as 76.0304 on the NASDAQ, and that was above that level at 76.0269. So just slightly above it, like basically 1 point, not even quite 1 point above it on the NASDAQ here. But still broke it. And you can see the NASDAQ closed. Now, because we are in such an extended condition, this is a bullish hammer, but usually bullish hammers are more important when they're at the low end of a trading range, not the high end of a trading range. But nonetheless, bullish hammer, well above the T line, closed strong. The NASDAQ level we want to see break for at least an early sign that something more bearish is developing would be 74.8539, and that would be obviously below the T line at that point. Certainly, if we close below the T line, that's something to look for. Now, weekly on the NASDAQ, obviously the daily, we're still just moving around in the overbought condition here. On the weekly for the NASDAQ, this is a bullish hammer on the weekly. But again, when you have a bullish hammer at the potential high end of a trading range, certainly not as important as when you have a bullish hammer, here, for instance. After we just had a large pullback, had a bullish hammer, that was a decent signal in retrospect, and we continued. But here, not so much. But nonetheless, that's not a sell signal in my books just yet. The other two indices look a lot more indicative of a potential weekly reversal, but the NASDAQ not really showing it here just yet. Okay, obviously in the overbought condition on the weekly. But before we have anything more bearish develop on the weekly, again, it will show up on this daily chart. Okay, so that's the NASDAQ composite. We'll go to the VIX. And the VIX still coming down. And right now we're near the low end of the VIX range. Possible double bottom here on the VIX. So we had this low on the VIX at 1344, and then on Friday went as low as 1341. So kind of a double bottom, close at 1357. And a little bit of a bullish divergence here on the VIX. So we made a new low on the VIX here, but this oscillator clearly made a higher low. So that's something. But again, we have to start breaking at least a short-term lower high, lower low pattern. So the first step would be getting above and ideally closing above this level on the VIX, which would be 16.17. So that's something to look for. And okay, SPX. No, not SPX. What I want to do is go to the VIX VVIX tool. So still on a neutral sign here. No sell signal yet. There's been there's been several false starts, but they never really confirmed. It just kind of meanders around the moving average here on SPX and on VVIX. But again, things to look for here. So we have a new low in VIX, okay, and we have a higher low on VVIX so far. So that's the potential VIX VVIX divergence. That's step one of the signal for a sell signal. Step two is VVIX getting back above this red moving average. And then that would be confirmed by step three, which would be SPX getting below the blue moving average, which it hasn't done yet. So that's something to look for. Okay, so before I end the video, also, so we basically just ended the month of February. And sometimes you get significant highs or lows right around the end of a new month. The end of an old month or the beginning of a new month. So within the next couple trading days, if we don't already have a high in place here, we might get that pivot and then have a reversal that possibly sets the trend for the month. But again, we'll have to see what happens. Certainly looking very ripe for a sell-off, but just as of yet, there's no confirmation. All right, serial trader signing off.